Hello, everyone. Welcome to another Wednesdays with Wendy, where we make small business ownership less stressful one step at a time. If you have, so this month we've been talking about deductible business expenses. We've talked about meals and entertainment and mileage, and those over time can certainly add up to a large amount. But what about large expenses? What about that new piece of equipment you need to produce your product? What about that machine that your business could really use right now? What about a vehicle for you to drive around and use in your business? Can we deduct those expenses? How do we do that? That's what we're going to talk about today. Hi, if you've never met me, my name is Wendy Kane. I'm the owner of Kane Accounting and Financial Coaching. I do bookkeeping and payroll for independent contractors and small businesses so that you can have peace at tax time and throughout the rest of the year. Okay, so we've talked about the small stuff, ordinary, necessary, meals, entertainment, mileage, those things. What about big expenses? When you've got some taxable income out there, wouldn't it be nice if you could go purchase a piece of equipment and lower that income? You deduct all of it, that's less taxable income, as in, and then less tax, right? Okay, yes, but be careful. There's always a caveat when it comes to taxes. So, when we're doing bookkeeping and financial statements, forget about the United States tax system for a second. On a set of financial statements, if you purchase a large asset that you generally expect to last more than a year, you're not allowed to expense that on your income statement. You're not allowed to deduct it immediately. What you're supposed to do is put it on your balance sheet as an asset. And let's say we're going to make the numbers easy. Let's say it costs $10,000 and it's expected to last 10 years. Well, you're not going to deduct all $10,000 in the first year. You're going to deduct $1,000 the first year, $1,000 the second year, $1,000 the third year, and you're going to go on until after 10 years you have deduct the entire $10,000 price of the equipment. Okay, it's called depreciation, and there's accounting reasons why we do that, but I will not bore you with that today. So that is how generally accepted accounting principles works. It's how bookkeeping, it's how financial statements are done. But what happens when you're like, man, got a lot of income this year. I sure wish I could deduct that on my taxes this year. Well, you may be in luck. There is an IRS provision called Section 179, immediate expensing. And I don't ever use IRS code sections because none of you know that. I barely remember the numbers myself. So I don't use that term lightly. I'm telling it to you so you can go to your tax preparer and say, "Hey, I bought some equipment this year. I'm interested in Section 179." They will know what you are talking about. You don't have to know what the number means, where it came from. Just tell them Section 179. They'll know exactly what you are talking about. This is a provision in the tax code that lets you deduct equipment fully, 100%, like the whole $10,000 in the year you purchased it. That would be pretty cool, wouldn't it? Like I said, your taxable income is up here. It'd be nice to subtract some of it and pay less tax because you have less taxable income. Well, as always, that's great. Okay, it's never quite that simple. There are rules because this is the IRS and taxes, and that there are rules. We know that. So, to give you some idea of what property and how this works. So it has to be, let me check on my notes here. It's got to be tangible personal property and certain real property. Like I said, I'm not going to go into super details here. It's got to be something physical that you can touch, and it has to be used in your business at least 50% of the time. And let's see, the deduction limit for 2025 is $2.5 million. Yeah, Yeah, you can buy $2.5 million worth of equipment and expense it this year, deduct it on your taxes. That'd be great. However, you can only deduct it up to the amount of whatever net income you had. So if your business made $3 million this year, you can deduct 2.5 million of equipment purchases. That's cool. If your business only made $500,000 in net income this year, you can only deduct up to $500,000. If you bought equipment worth $1 million, you can't deduct the rest of that because you don't have it. The rules are you cannot create a net loss using this deduction. So, it would be pretty cool because it can wipe out all of your taxable income to where your taxable income is zero. How cool is that? But you can't keep going. And there's rules. I think you can carry it forward and all that. That's for tax preparers, not for us. You can ask your tax preparer about that if you have a business where you purchased, millions of dollars of equipment. Let's see. For cars, you can deduct those under Section 179 with one other, again, there's rules and exceptions and exceptions and exceptions. If the car weighs, where was that? If the gross vehicle weight weighs over 6,000 pounds, the deduction is capped at 31,300. I know it gets complicated quickly, doesn't it? So you can't go spend 70, 80, $100,000 on a new Ford Raptor for your business and expect to deduct the whole $100,000. It's going to be, limited. And I'm assuming a Ford Raptor is over 6,000. It may not be, but some of these large SUVs, you can look up Google or use your owner's manual. It'll tell you the gross vehicle weight because I certainly don't know what they are. um, anyway, so to recap, for accounting purposes, you can't deduct everything in the same year, but for tax purposes, you might be able to talk with your tax preparer and they will help you navigate all of that. They'll help you know for your business and your situation what you can deduct and what you can't. And meeting with them before the end of the year now would be a great time, is perfect because you've still got 2 months to make an adjustment to either purchase some things or to decide not to purchase something before the end of the year so that when they're doing your tax return next year, you aren't surprised that all of a sudden you have a huge net income and you owe a lot of tax that you weren't expecting. All right, that is it for this week. Remember, no one is born knowing how to do this, and it's not taught in school. If you're feeling lost and overwhelmed, you're not alone, and that's why I'm here to help you. Go to my website and sign up for my newsletter, where I provide more tips like this on how to run a small business. Y'all have a good day.